Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of August the 28th, 2017. Now, to get started, we're going to begin where we always do with that all-important US dollar index. Now, what we can assess here is essentially the dollar is unable to gain any kind of traction to the upside. Our VantagePoint indicators continue to fail on the upside break. Our neural index is back down to a 1, but you can see that we've been running right along this critical 18-day predicted moving average, which comes in currently at 83.27. Now, we did have a push higher the previous week, but as I talked about in last week's Forex Weekly Outlook, it's unlikely the dollar would gain any real strength. Now, the Jackson Hole didn't help anything. Yellen didn't help much. Mario Draghi with the ECB kind of pushed the euro higher, but essentially nothing has really changed. We've come up against this critical 60 level on the predicted RSI only to fail. Now we're breaking below the 40 level, so this is warning that it's likely we're going to see further dollar weakness in thin August trade. Now, the major trade is not going to start again until the first week of September. Next week is going to be somewhat of a holiday short week with Labor Day in the US and Canada. So I'm not expecting any big moves here, but again, you want to be very cautious trading next week because the following week we are going to be a holiday short week. Now, with these indicators on the dollar index, this is having a direct positive effect on Euro US. A fantastic trade on Trader Planet this week, the long Euro US, and again here on VantagePoint. But what we were looking at specifically is we're following along the key VantagePoint 18-day predicted moving average. We're watching the additional indicators from VantagePoint very closely, and essentially they're all remaining net positive. So we're holding above the 40 level. We're essentially, for the most part, holding above the 50 level on the predicted RSI. We now have a crossover to some degree on the predicted MACD, but the neural index and the predicted differences, along with that triple EMA cross from VantagePoint, have been warning of euro strength for basically the last several weeks, as I've discussed here, and again, that's now come to fruition. We've broken through this trend line. We're pushing higher, and we've closed the week above 119.20. So the area to watch next week on the downside, 117.67, but these levels start at 118.52. In my respectful opinion, we're likely to see buyers coming back in after a small corrective move lower between 118.15 or 118.52, excuse me, and 117.67. Now, once again, the majority of the VantagePoint indicators are pointing to further euro strength. Now, with US Swiss franc, that's obviously with basically the same trade as euro US here, guys. One goes up, one goes down. So in this particular case, US Swiss franc will follow the dollar index almost to the number. So when we look at this, we've had some support that I talked about in last week's Forex Weekly Outlook. We've taken a pretty big dip below there, our predicted short, medium, and long-term differences, our strength indicator. But more importantly, I would be watching this predicted MACD very closely here, guys, because what I'm seeing is a potential breakdown of this zero line. We've been holding this zero line for basically about a month and a half, and if we break below there, and the predicted RSI is already warning with this break of the 40 level that this particular pair is potentially getting ready for a bigger move to the downside. So you equity traders that are watching this video, if US Swiss franc does break to the downside, that is a key warning sign that the S&P, the DAX, the Nikkei, they're all going lower. So be very careful with your equity trading next week. That key VantagePoint level we want to watch very closely for the week, 96.45. As long as we're holding below 96.45, we are short. We would sell into that particular level. Now, with the pound dollar, I've talked about this one extensively last week also, that there was a fairly significant support sitting down here around the 128. We've pushed a little bit below there on some of the data out of the UK, but now we're starting to recover. The critical VantagePoint level we want to watch is 129.17. We're closing 128.75. If we can retake this area right here, guys, then that's going to tell me that we're probably going to see further dollar weakness. And It's not necessarily that the pound is strong here, guys. It's the US dollar is weak right across the board. And we again, the pound dollar is tied to the dollar index like the CAD, the euro, the Swiss franc. So if the dollar index is going down, chances are the British pound US dollar is going up. Now, our neural index is turned positive. Our strength indicator is positive. We're coming out of a heavily, moderately oversold condition here. But the predicted MACD is still warning that the British pound is not necessarily out of the woods here, despite what happens with the dollar. The position of the predicted RSI, 51.5. That I like. It's telling me that basically we're regaining some bullish momentum here. But essentially the pound is really stuck here, guys, in a range. Pretty much between the 126 level down here on this swing low and our swing high coming in just under 133. So this range continues to play out, but I would look for a break. And one of the key indicators, the key intermarket indicators that will cause a break is if we get a spike in oil. So if oil spikes higher, that'll be a positive for the Canadian dollar, but it will also be a positive for the British pound. So for next week, there is a slight bullish bias here for this particular pair, but it really is going to depend on what happens with that dollar index. Now, with the dollar-yen pair going into next week, this basically is an equity trade here, guys. VantagePoint's made a great call on the S&P, the Nikkei, the DAX 30, all the global indices moving lower. That puts strength into the Japanese yen, which puts downward pressure on the dollar-yen pair. But we have a heavy trend line coming in at or about the 108.50 area. That area continues to hold, but I don't know if it'll be able to hold going into next week. The only thing that can turn this pair higher is if the equities turn around, and right now there doesn't seem to be much hope for that. Now, it's possible it could turn, but basically the dollar has a very high correlation to the global equity market. So if the equities are going lower, chances are the dollar is going lower and vice versa. So we'll watch this right now. The key VantagePoint level 109.87. You can see that we've had up. I just zoom this in here so everybody can see this properly. We've had a significant failure on Friday at that critical. We came right up to that key VantagePoint 18-day predicted moving average again at 109.87, only to drop significantly by almost 100 pips on Friday. So we need a sustained break of that, but an even bigger problem is up in this 111 area where the trend line is going to come in. So we have to, if there's any hope of a bullish bias here for dollar yen, equities have to turn higher. The dollar index has to turn higher, and again, I think that that's very unlikely at this particular time. Looking at the VantagePoint indicators, now we're sitting at 40.9 on the predicted RSI. We need to break under 40, and that will trigger downside momentum. So keep a very close eye again on this upside target of 109.87. But right now, guys, selling into that level has definitely been a good play. Now, as we come into our three main commodity currencies, the CAD, the Aussie, New Zealand, all very similar trades here. So we don't want to get too, overthink this too much here, guys. If commodities are strong, these three currencies are strong, and vice versa. So right now, it looks like US Canada has pretty much put a top in at 128 as we're seeing oil prices starting to rise, the dollar index starting to fall. Our critical VantagePoint level, 126.05, our predicted short, medium, and long-term differences are actually sitting at trend-ready levels to the downside with this triple AMA cross. The only thing we have to watch is that we have visual support sitting at 124. Now, a breakdown below 124 is likely going to trigger a bigger move here, guys, potentially down into that 119 area. So if we zoom this charts out here and we look for this, you can see that's basically the 124 level is the only thing that's holding this pair up. So if oil does turn higher, back up towards $50 a barrel, the 124 level doesn't stand a chance. Right now, the VantagePoint indicators are saying that there is a better than 50% probability that is exactly what's going to happen. So when we look at the indicators, once again, our key VantagePoint level here, I'm just going to bring this over so everybody can see this clearly here. That 18-day starting at we have resistance starting at 125, going all the way to 126.05. Selling into those levels is a reasonable play. When we look at the critical indicators, We have a crossover on the predicted MACD below the zero line, which is a very powerful signal in itself. We've got a breakdown of the predicted RSI below 40 with that triple EMA cross. When we connect that to our neural index, we connect that to our predicted MACD, and then we in turn connect that to the predicted RSI. We have a fantastic sell signal here. And again, this is with my own direct clients, we've been selling this one for basically the entire previous week. But again, guys, watch out for this 124 area. So if there's order flow guys that base most of their trading on price action, they will be looking to try and buy off the 124 area. Now, as we come into Aussie and New Zealand, I've talked about this one extensively. Right now, between Aussie and New Zealand, there is a bit of a difference between these pairs. The Aussie is clearly the stronger of the two. Now, some of the inflation data, the Bank of New Zealand, the RBA, all that works into it, but essentially the Aussie is the stronger currency. Now, we're coming into a very tight wedge formation on this particular pair. You can see the critical vantage point level, 79.02. Buying off this level is reasonable. Now, when we look at this, you can see that we're bouncing off of this trend line. We've been doing that for several weeks now. That trend line area is coming in at about 78.70. So as long as we hold above 78.70, longs are definitely favored here. We're holding above the zero line on the predicted MACD. We're at 60.4. Now again, when you look at how we use it here with the 60-40 split, a break of the 60 level means we have momentum. So if we have momentum building on this, we want to get on the train because it means it's leaving the station. So it does look good right now for longs, but we need to hold this area above 78.70 to be very, very clear here, guys. Now, again, most of the indicators from VantagePoint, the predicted short, medium, and long-term differences, our strength indicator, they're right around the zero line. So there isn't, I would not call this a super strong signal here, but there is a buy signal, but it's weak. So we have to let this thing progress, but we could see a big spike here. In my respectful opinion, the Aussie dollar is getting ready for a long-term trend reversal back to the upside. Essentially meaning that we would be looking to buy Aussie US over the next potentially several years, maybe even 5-6 years, because again, these longer term cycles, they tend to run anywhere from 6 to 7 years on dollar bull and dollar bear cycles, and we're about 6 years into the dollar bull cycle, right? So keep an eye on those levels for next week, but I think there is a trade there. When we look at New Zealand, basically the same trade, but it's been weaker, and this is because of Aussie New Zealand. The Aussie New Zealand cross pair is putting a lot of downward pressure. As people buy Aussie New Zealand, it puts downward pressure on New Zealand US, but we have very, very heavy support sitting at 72, the level I talked about in last week's Forex Weekly Outlook. That is loosely holding for now, but again, we're starting to recover, but the key vantage point level, 73.01, I would be more comfortable, guys, buying it above 73, believe it or not. Small longs can be attempted at the 72 area, but cut your position size down because, again, this pair is under pressure from the cross pair.